Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, we have a mean reversion cash machine trade this week. Earnings season hasn't arrived, but there are some companies, just like last week's Constellation Brands, reporting operating results during this period while we wait for second quarter earnings season to begin in earnest in a week or two. Up next is Delta Airlines reporting results on Thursday before the market opens. And just like Constellation Brands, you can see from this chart what's happening here with Delta Airlines in advance of its earnings report. The magnet of the mean is very, very powerful. And today, Delta Airlines shares, after trading well above the mean, today decided to get comfortable hugging that mean price down at 49.19. We are just above that level at 49.44 as we record this video. So from a mean reversion cash machine trading standpoint, the options are priced implying a volatility or an expected move up or down of 5.5%. That is a pretty healthy amount. It should be noted that last quarter, when Delta Airlines reported results, the stock moved over 20%. So we could be getting some extra implied volatility because of what I would call an outlier event. In statistics, when you get an outlier event, it is almost always best to just toss out that number because it has an inordinate impact on determining the averages of the move, the one-day move after earnings results. But I'm looking at Delta Airlines and that 5.5% implied volatility, and I can see that that type of a move would take us right to two standard deviations above the mean or two standard deviations below the mean. If I'm doing that calculation, the let's see, the two standard deviations below the mean right now is about 6% below the mean. So yeah, if there is going to be a 5.5% move, it's going to take us up or down right to those two standard deviations, a ceiling and a floor, if you will. So if I'm looking at trading this one, I'm really only going to be interested in doing a spread trade here. There's too much risk of a outlier type event like we had last quarter. So even though I'm going to throw that out in terms of calculating my averages, I'm not going to ignore that outlier event in terms of the potential impact on the risk I'm willing to take or not take in trading Delta Airlines in advance of its earnings report. So the spread trade I would be looking at starts with a $54 call, and you can see that that's a healthy amount above the two standard deviations above the mean. For the puts, I'd be looking at a 46 put, and that's just below two standard deviations below the mean. Both of those put and call strikes are going to be 7.7% above or below the current price of $49.49. Again, that only gives us a 2% cushion based on a 5.5% implied volatility. So it's not the greatest dynamic heading into the Delta airline trade, but there is, I think, money to be made in again, that power of the mean, where I just don't think we're going to deviate very far from the 49.19, and you can see that in the trading here today. I wouldn't be placing a trade here, and again, I'm only looking at doing credit spreads using those strikes as I mentioned. and I'm not going to place this trade until Wednesday. So there's still a couple more days of trading to go. I'll review this trade again when we get closer to making it, which is going to be Wednesday afternoon in advance of Delta's earnings report. That's all I have for today, folks. I'll be back with another video tomorrow. This is JD for The Rational Trader. Take care, have a great day, and we'll see you all next time.